Hi, welcome to the Market Alert for Tuesday, the 28th of November 2017. So starting off with the pound yesterday, see the market testing after a bit of selling there and then moving higher. You can see the green buying bars, some selling pressure in the market in both of these two red bars. And then eventually the market stops. You see some profit taking here as the market hits the 133.50 level. Trade sideways, selling disappears, market sees new buying coming in and then drives higher. Again, we see some potential weakness there as the market's undecided, and then finally we get the last bit of buying there, which is probably those late to the party. And then you'll see, I'll just remove some of these arrows just to make it a bit easy to see. You'll see the selling coming in and then the market moving lower, first on low volume, then it starts to increase, and then as we break back through this area here, this is where the stop losses are. The market tries to test to see if there's anybody else that wants to sell, and then all of a sudden they come in and sell, and then eventually it's all over and you see the market trade in a sideways range there, and that's where it's been all night. Bit of activity this morning, and in the daily chart, the reason for this, you'll see that the market's still struggling with the 133.37 area, still failing to close above this level. Yesterday market tried to hold above it, but then was met with selling, which we saw in the 15-minute time frame. Lots of central banking news today. We've got Carney speaking at 7:30, already out. You can see their reports out. Carney out at 7:30. Money supply FOMC member Dudley, chair designate Powell is speaking, and then it's all central bankers today. And then we've got a bit of consumer confidence out at 3 p.m. Forecast to be slightly higher. Harker's then out, and then Mnuchin speaks at 8:45. So a whole raft of central bankers today, and their cohorts out speaking. Yesterday afternoon, the Dow moved higher from the off. We know we want the markets up, and again you can see there, off we go. A lot of volume here initially, then you see the buying, and then you see the selling pressure come in here. Volume is greater in this bar. Again, let me just remove. Now you can see the range of this bar here, the red bar, is greater than the previous bar. The volume is greater. We know we've got some profit taking in this area. Fortunately, this disappears, as you'll see in the next bar, and the market is then free to continue higher. Trouble is, it's going up on fresh air, and then before you know it, the market is hit by some selling. You get some buying pressure trying to hold the market in two bars here. Again, you can see the range of these two bars gets narrower than the previous selling bar, and then the market fails to hold and further selling comes in, but eventually it disappears, and you'll see again the market drops off. No more selling around when we get down to here, so then we're free to bring the market back and then hold the market for the rest of the session. Mission accomplished. And in the daily chart, of course, we can remove all of this now because we have a new all-time high, and that comes in at 23,639, and again 24,000 is on the cards before Christmas. We've got 4 weeks yet, and we're only 361 points away from that magical 24,000 level there. Right, let's have a quick look at the implied volatility before we conclude. This is up slightly. Down slightly, as you would expect, as the market put in a new high, down from 859 to 854, but just barely sideways, really. Again, waiting for central bankers, and we're going to take into account again is the Santa rally bonuses. Market's going to be run up until December. Then, of course, in the new year, we see the switch in February from Yellen to Powell. A lot of other things coming on board as well, and in particular Bitcoin is starting to create massive waves. I haven't said a lot about this, but I've been looking at this for a long time, and even the front page of this morning's Financial Times, it's now made it to there. I'll just show you this before we conclude. So here's the headline in the FT. Bitcoin record triggers unease amongst traditional marketplaces. Yes, it's probably a bubble, but will it be around for a long time? Yes, I think it will be because of the blockchain, but I'm not going to get into that. Very interesting, all of this. Certainly there's some sort of a bubble building and you get big corrections, but I think it's here to stay. And as the article here also says, as Bitcoin nears 10,000, central banks kept up at night because it circumvents it. It's decentralized. It is too complex for most people to understand at this point and to be everyday use. But watch this space. This is a bit like the dot-com bubble and also the start of the internet when people said, oh, it wouldn't be here, it wouldn't last forever. I think this is going to be slightly different in that it will be here, and that's why central bankers are now starting to be slightly concerned about it because of the masses coming into this. I mean, Coinbase, which is where most people open their accounts to trade Bitcoin, is now sitting on 21 million users there as well. But more on this as going forward. I've been doing a lot of work on this one and how we could potentially get in here and spread bet it as well. So that's it for this one. I will report in if there's anything. It's Tuesday, it should be fairly quiet once we get all the central bankers out of the way, but we'll just wait and see. We did have the Thanksgiving holiday, which of course there is a bit of catch-up coming, so it may not be as quiet as it normally is. Right, that's it. As ever, thanks for watching. See you in the next one.